The 4:30 p.m. closing bell webinar today with our special guest, Chuck Crow from DTI. My name is Josh Levitan, part of the C2 instructor team. Let me just get a quick sound check first so I know everybody can hear me loud and clear. Today is Chuck Crow, Grant. Tom Busby has been sick with the flu, so we were supposed to have Tom on, but right now Chuck is one of his original employees, and he actually hosts the Night Owl. So definitely special guest over here, and it was fantastic webinar lined up for you guys today. All right, so we got Agatha, Sarita, perfect. All right, fantastic, guys. Well, listen, like I said, we have special guests today, Chuck Crow from DTI. Now, like I said again, Chuck Crow is one of the original employees of DTI and learned side by side with Tom Busby since he embarked on a career in trading education. Working as a clerk for Tom in early 1996, Chuck completed his education in just 3 years later, receiving a BA from Spring Hill College in 1999. Chuck is an expert on watching key numbers and has written DTI's pre-market planner since 2001. And as mentioned again, Chuck hosts the Night Owl, where he instructs students on what to look for during the night market and upcoming day market as well. So the topic of today's webinar, the new mini DAX changes the dynamic of trading. So what you guys are going to be learning today is the new mini DAX futures, how the European close affects morning trading, and trade forecasting. And here, Chuck, are you there?
Josh, ready to go.
All right, fantastic.
Okay, and I'll make sure to do that. I know, Tom's always interested in how everybody's doing. He's probably going to be happy to hear that you're asking after him. He was fine this morning. I think that, some of these old guys, they can't last into the afternoon quite as much. But yeah, he's been battling a little bit of the flu, but we expect him to be up and running to full capacity by the end of the week. So let's go ahead and kind of get into everything here. First of all, though, I do want to go back. That introduction, it only took me 3 years to finish and graduate. Actually, that's it's a little bit of a strange thing there. I started working for Tom while I was still in college, and after I started working for Tom, it took me a whole 3 years to finish. So I think I did the 5 year plan in college. The last three lasted a little bit longer because I was, working in the market at the time. So the direction of that may have gone a little bit different than what it actually was. But let's start with the risk disclaimer here. You guys know this business. You know the way it works. Past performance, not necessarily indicative of future results. What else? There's risk in trading. And both of those are very true statements. If you don't take the time to prepare and respect the market that you're looking at and understand it, then past performance is not going to be indicative of future results. And it's a constant process. One of the things Josh mentioned, I host the DTI, they call it the Night Owl Show. I call it the Pre-Market Planning Show, where we actually go through and we look at the markets that we're going to be trading and take the time to learn about them. Those of you who were here with Josh earlier, he's reviewing everything, going through that. That's what we as traders have to do. And it's great that we have an environment that we can do it in front of everybody because you kind of hold our feet to the fire. But having that sort of dedication to going back and doing that work day in, day out is very important. Is this being recorded? I don't think it is being recorded. So don't worry, DC. I'll keep it pretty simple. And if you got questions, I'll be more than happy to answer them. All right, so let me go on from the risk disclaimer. The topic today is the new mini DAX, which is really Tom's topic, but I'm going to go through his slides here and give you all that information, then give you a little bit of extra also. I think we're only scheduled to be on for about another 20-25 minutes, so I'm probably going to get through these slides pretty fast and give everybody a chance to ask questions as we move through. So let's see. Can I make the slide full size? Yeah, then people don't get to see where the market is. But we can go up on it a little bit. How's that? That better? Okay. All right, so effective the 28th of October this year, Eurex Clearing did offer This was the press release from before that. Basically, we got the mini DAX online. And going through, this is basically the press release. So it's a little bit after the fact. But the mini DAX is up and trading right now. Now, not every platform has that information. And DC, yeah, I can make the slides available. I'll have to print the PDF afterwards, but I can do that. So not every platform has access to the Eurex, to the exchange. So if you're trading with someone who doesn't, give them a call and say, hey, we'd like to trade the Eurex, see what you can do about that. But this is a great little product. And Tom and I sort of differ on our viewpoints of this, but link to the full release is right down here. I think you can actually click on the link. No, you can't. You can't click on the link. But what I can do, I can probably copy that in. Let's see, go through. Oh, I know how to do that, but the only thing is if I do that, then I got to hit the escape button to get back to the charts, and it just all sort of messes up later. So I like having my screens here, and actually let me just play around with this a little bit. Keep you updated on the last traded prices. Yeah, let's do it this way. This way we can see everything and keep updated on the prices. What is tick size and volume? Yeah, we're going to get down to that. First of all, DTI's history of trading the DAX. The reason we really got involved in the DAX, Tom loves to tell the story about 9/11. Unfortunately, it's not a very good story. What really goes on there, if you guys remember back to that day, our markets were open and trading. The futures markets were. Cash markets hadn't opened quite yet when everything went on. We had traders who actually had positions on and had stops that got blown through, and there was no guarantee on the stops. So we had to find a way to get to markets where we could offset positions, do some hedges, do something. And of course, one of the good things about the world economy is it is a world economy, and there's always a market open. And the DAX was one of those markets that's open. Now, the DAX, if you're not familiar with it, it's a lot like the Dow Jones Industrial Average. It's big 30 stocks based in Germany, trades on the Eurex. Some stocks are familiar. Siemens, everybody's familiar with that. Um, Volkswagen, of course, we all know what's going on there. Uh, BMW, the big stocks in Germany are all in there, and it's pretty much across the board. Again, much like the Dow Jones Industrial Average. So we were able to use the DAX. Yeah, Deutsche Bank's another one. But we're able to use the DAX to put on positions to hedge open positions that may have existed in the S&P futures or in the Dow futures or in the NASDAQ futures. So being able to cross connect to those global markets was something that certainly helped out a lot during that time. And even afterwards, you get to see how European markets, I mean, I think we've all seen this push to a global economy and this influence that Europe has over our markets, especially early in the morning. How many of you guys realize that Mario Draghi over at the ECB, the European Central Bank, was speaking this morning at 7:30? And that was a big event for our markets. And it's kind of funny because if you don't understand global markets, everybody is always shocked about how big the jobless claims number is at 7:30 on the first Thursday of each month, which happens to be the same time as the ECB press conference. Connect the dots here, and I think you might see that Europe does play an important role globally. All right, let's go down, and here are the contract specs. You guys were asking about this. Um, so in the contract specs, the mini DAX, which they list as FDXM, F is for futures. So if you look over on my platform over here, DXM Z15, right down here, this is the mini DAX. Notice it's trading about the same price as the DAX. It's actually closed right now, but that's the way the symbol works. Now, it'll be different on different platforms, so be aware of that. You got to check with your provider, find out what that symbol is. This is using DTN's IQ feed, which is a data provider. I like to use that because I can go back and get a ton of history this way. But there's the mini DAX right there. Now, settlement, Not worried about that. Description, not worried about that. Basically, it's the DAX but small. Uh, Price determination, the contract value, this is what everybody wants to look at. €5 per index point. Minimum price change, 1 point. So if you look at DAX versus mini DAX, it's basically 1/5 the value. Now, Tom always likes to go back and say this is going to be like the mini S&P, and this is where I disagree with him. This is a lot to me like the mini Dow. How many of you are familiar with the mini Dow futures? And Heinz, no, we are not recording. At least not to my knowledge. If we're recording, I don't know about it. So, let's see. Bill trades the mini Dow. Yeah, the margin should be, they don't actually have the margin here. It's probably going to be a little bit high as it gets started because the volume's kind of low. But I think eventually you're going to get to a point, Bill, where or let's see, who asked about the margin? Yeah, that was Bill. It's going to be very much like that mini Dow. I think that's going to be the issue here. It's going to be a fun market. It moves in an average range that is similar. If you look at the specs of the DAX, compare them to the Dow, the specs are very similar. The big difference is, of course, the mini Dow trades at $5 per point versus €25 per point, but the average ranges are similar. The way the market moves is pretty similar. So there's going to be a little bit of differences from a European to a U.S. mentality. Weights and measures are one of the big differences between Europe and U.S. You know, we think in terms of fractional measurements, 1/2, 1 whole, 1/4, and they think in terms of metric measurements. You know, the whole 10-base system. So 100, 10, 1. So you've got that going on, and it's going to create a little bit of a difference. But keep in mind that most of the people who have been trading the DAX also trade other markets around the world. So a lot of times you think you're competing with Europeans, you're actually competing with U.S. traders trading European markets just like yourself. So that metric versus fractional system, it doesn't really come into play as much as you might think. Now, very, very early in the morning when our U.S. markets aren't quite as active, you'll see that metric measure come out, 10-base numbers being big. But a little bit later in the day, you get into the fractional numbers. They're always the big numbers to pay attention to. Let me keep going here. This is time of day, and it's what Tom looks at on time of day. Now, what I look at it on time of day is a little bit different. And I wonder, hang on, let me see if I can pull something up over here. I'm going to go in and grab a time of day window or a time of day clock that looks a little bit different. This is off of my key numbers class, I think. And this is probably going to pop up in the wrong place. Yeah, there it is. Okay. All right. So here's my clock. And this is really where I think you can see the influence and why this DAX is so important. European markets, European cash markets are in blue over here. Asian cash markets in yellow, U.S. cash markets in red. The black area is all the futures markets. It goes the whole way through. But notice how this European market not only intercedes with Asia, but also crosses over into U.S. markets. So you have this time frame, which is from about 8:30 in the morning to 10:30 in the morning Central Time. For those of you in New York, that would be, 9:30 to 11:30. But that 2-hour time frame is why the DAX is so important to us. Go back to Tom's clock over here, and you can see the U.S. morning session starting at 8:30, ending at 12:30. But don't forget that Europe doesn't end at 8:30. They extend another 2 hours into the U.S. time slot. So as we're looking to see what the influences are, we pay an awful lot of attention to Europe and not that much attention to Asia. But again, going back, and I've often been asked, well, why are you looking so much at Europe and not at Asia? Isn't Asia a big influencer? Absolutely, yes. Asia is a big influencer, but Asia is going to exert its influence on Europe Europe then extends that influence and puts it on us. And so we've got our markets and Asian markets, which actually don't cross. Now, our futures markets do, obviously, but our cash markets don't cross. So we don't really focus so much on an Asian influence. That's going to be carried over in those European markets. Asia's going to influence Europe. Europe's going to influence us. So our main focus as we get ready to get everything rolling in the U.S. markets, what's going on in Europe and how is that affecting not only the first 2 hours, but how does it carry over? So we always want to pay attention to that. That's where the time influence thing comes in. But we basically, here at DTI, we break the time into 4 different segments: the Asian segment, the European segment, and 2 different U.S. segments. I like my clock a little bit better, but dealing with Tom's slides here, you've got Tom's presentation, so I'm going through it here. Strategies. Global handshake. Now, this lets us know how all these markets are moving. And if I go over to my roadmap software over here, and go into the launch menu under global handshake, this shows me how those markets, all those foreign markets, were performing. The Nikkei and the Hang Seng, well, they weren't down too far, but of course, Europe, big influence. And projecting this out, previous E-mini S&P closed 2080-150 handshake number based on the way Europe and Asia performed, mostly Europe. The S&P was projected to be down around 2041.54. That's after the cash markets at 10:30. And, well, we got down to 2040. So this handshake, I know it's kind of hard to read these numbers because they're really small, but, average handshake down 1.92%. So basically the average foreign markets were down almost 2%. If you project off a 2% drop in the U.S. markets in the E-mini S&P, that's a 40-point drop, which is what was projected there. The DAX, though, was down 3.58%. Paris down 3.58%. But the FTSE, not quite down as far. The Swiss market, not quite down as far. Actually, most of the drop that we had today was in regards to Mario Draghi and the comments he made. And, of course, the ECB, they can influence but not really affect Britain. Remember, Britain is not on the euro. They are not part of the eurozone. So kind of a different little look there. Now the DAX 6 a.m. number. The reason we look at the DAX 6 a.m. number, if you go and you do a little bit of a shiftiness on the time frames, think about this. What time is it currently in Germany? Right, Germany is on Central European time, which is GMT +1. And I'm sitting here on Central U.S. time, which is GMT -6. So there's a 7-hour difference in my time and Germany's. Now it's currently 4 o'clock, or just about 4 o'clock here in the Central U.S. time zone. So it would be 7 hours difference. It would be 1 a.m. in Germany. Is that correct? When was today's handshake number available? Well, Clearview, if you've got the roadmap software, it's available whenever you want to open it up. Probably the best time to open it up is early, while you've got European markets just starting out and you already know what the European influence is, or what the Asian influence is. I don't know how much good it's going to do you tonight at 9 o'clock because you don't have the new European numbers. So almost 11 p.m.? Wait a second. 7-hour time difference, almost 1 a.m., isn't it, Agatha? Because if it's 5 o'clock on the East Coast, 5-hour time difference to get to GMT. No, you're right. I'm sorry. I'm doing my math wrong. 5 o'clock East Coast. East Coast is GMT -5, so that would put you at 10. That would be 11. Yeah. I'm not going to 12. I'm going to 10. Got my math wrong. So Agatha's right. 11 p.m. But let's extend that forward. We always talk about how big, or I should say DTI talks a lot about how big coming back from lunch is. Now, if lunch happens at noon, or actually, I usually have my lunch at about 11 o'clock Central Time. What's the difference there? That would go backwards. But let's do this. 6 a.m. in the DAX. So 6 a.m. Central Time. At 6 a.m. Central Time, what time would it be here in the U.S.? Or 6 a.m. Central European Time. So there's a 6 hour difference to New York. So it would be the equivalent, right? It would be midnight, but it would be the equivalent of about, if you project that forward, I'm doing my math all sorts of wrong here, but if you project that forward, it would be the equivalent of noon, right? So when we get to our noon, I'm not really worried about that time, but 6 a.m. for them, or 6 a.m. for us, would be noon for them. Right, so if we're looking at 6 a.m. Central European or Central U.S. time, that would be a, either noon or 11, right in that area, noon or 1. It's lunchtime, basically. This is why Tom looks at it. It's when they get back from lunch. So between 12 and 1 o'clock. And so we want to see how they come back into the market after that lunchtime break. That's why that 6 a.m. number is kind of important for us. Man, that was a lot more difficult. Time zones are always iffy for me. The European close is another big factor here. That's at 10:30 a.m. Central Time, 11:30. Um, yeah, our breakfast is their lunch. Great way to put it, Cleaver. Thank you. So the European close is a few hours later at 10:30 a.m. U.S. Central Time. That's 11:30 a.m. Eastern Time. See, we get time zones all mixed up. So we want to know what the market's doing at that time. Have you guys seen how the market generally shifts at about 10:30 in the morning? It either extends a rally or a sell-off or kind of turns around. Well, a lot of that is because we get that European influence out of the market. And if it's not a heavy influence, then the U.S. markets are going to take over the leadership role. Today, it was a very heavy influence, so that leadership kind of stayed with Europe and the market just went down. Of course, you get down close to the open of the year, and wow, surprise, we go down, challenge the open of the year, and even go a little bit below it. Now, in terms of key numbers, we talked about this a little bit earlier, metric versus fractional. So when I'm looking at very important numbers on the DAX, and just looking at a chart over here, you can see closed at 106.84, but your big numbers are going to be 10700, right? 11,000 would be a big number. The double zeros, the centennial numbers, are always important in the DAX. So we always want to pay attention to those. You break 700, market's going to come down a little bit. Went down to 641. We opened at 111.50, which is more of it's kind of a 10-base number, but it's also kind of a fractional number. So, be aware of what's going on there, but your numbers are pretty simple here. I don't want to get everything too complicated. 100 is a big number, 50 is another number, but you would expect a number like 25 to be important. If 100 is important and 50 is important, 50 is half of 100, so 25 is half of 50, but that's a fractional mentality, so actually 25 shouldn't be that big of a number in the DAX. On the other hand, the high earlier today, 113.2350. Maybe it is. So we do have U.S. influence, U.S. mindset on some of these European markets, and you don't want to discount that. The V factor, and I can actually show you the V factor on my roadmap here. We get to look at the amount of contracts traded, and I'd put in the mini DAX, but it's closed. You can see that certain markets have higher volume than others. I always pay a lot of attention to the E-mini S&P because, well, look at those numbers. Look at that. That's just insane. I opened this at I guess it was a little bit after 1 o'clock today. I had to shut everything down, open it back up. Since 1 o'clock, European numbers didn't climb that much because, of course, they didn't do that much after 1 o'clock. They do most of their damage early in the morning, early in our morning, in their regular day. Um, but I think what you're going to see with the mini DAX is something similar to what we've got with the mini Dow. The Eurostox is actually your big volume market. And the big question and the big thing that we're waiting to find out in terms of this mini DAX, do we get a shift in that Eurostox where the volume starts coming over to the mini DAX? And as the mini DAX gets more and more popular, does it start stealing away volume from the large DAX? And when you consider it's only 1/5 the value, is that going to be 5 times the volume? That's what a lot of people are looking at. I think that we're going to be a lot closer to the mini Dow than the mini S&P. Uh, Tom and I differ on that one, but the V factor can show us the volume numbers that are coming in. It also shows us, and let me go back to this, it shows us who's pushing the volume. This is the side where the buyers, the market is bullish. This is the side where the market's bearish. So which one, who's pushing what? And we get to see how quickly the market develops. We've got little ratios, which are off over on the side here. I'm not so much worried about the ratio. I'm a lot more interested in those big numbers there. But you'll notice it'll flash red or flash green based on what's going on in that market at that time. A 1.2 ratio for the Eurostox means we've got more bids, more buyers than offers. And this is about executed trades. So as a trade comes off of the bid, usually it's a seller who's hitting the bid. That's actually showing up on the ask side. I know it's a little bit confusing, but we're looking to see who's pushing the action. And be aware of low volume markets, like something like the DAX, especially late at night, or late in our afternoon, late in their night, where you might get some retrograde type action. Same's true with the Eurostox. But I think both of those markets climbed a little bit off the lows to close. You can see how the S&P sort of rallied there at the end. A little bit of profit taking maybe. So some issues going on there. I need to go ahead and move quickly because I'm realizing it's just about 4 o'clock. So let's see. Global handshake. Well, we already went through this. It was on the slide before. Apparently, I should have gone through all these slides. There's the DAX 6 a.m. number, key numbers, European close, V factor. There we go. Got everything done. Talk about money. You know what? I don't like this slide. I saw this slide and I told Adam that's not a very good comparison. The DAX ATR is 300, the NASDAQ ATR is 100, which they actually aren't quite there. But the money thing there, that doesn't make any sense. I'll come back and talk about that. Let's look at today's market. Fill out the roadmap survey. What else have we got? Join trade room open house Friday at 7:30. Okay. So let me do this. If you fill out the survey, I'm just going to go ahead and collect these up here, put this up, and move on. But if you fill out the survey, you can get Tom's 10 trading insights. And if you register your trade room, we've got an open house thing that we do on the first Friday of each month. So if you guys want to register, you can come in there. Put those two links up there. Questions, comments. All right. So I'll leave that page up. Actually, I'm just going to minimize the thing. So we're done with the slides, but I do want to go in and take a look at today's market. One of the things that we've got going on, and Josh, if I go over, just cut me off if you need to. But one of the things that we've got going on, I'm going to change my slides around a little bit here, change my charts around, show you the DAX and the E-mini S&P side by side. If you take a look at these markets, now I don't think it's really any great surprise that most of our markets were all kind of in line with each other, both in Europe and here in the U.S. You can see the way these markets were moving. This big red bar here is at 7:30 in the morning, and that's when Mario Draghi started talking. Notice that's a much bigger move than the similar time frame, which is at 8:30 in the morning here for the U.S. markets. So this is actually that's 7:30. That's 7:30. So European markets went down a lot more than our U.S. markets, even though our U.S. markets did respond. But Europe was showing just things falling apart. And what a lot of that was Mario Draghi basically that they cut the overnight rate, but they didn't do as much stimulus as everybody thought they were going to do. So that was perceived sort of as a negative, no more QE, or at least not this time around, or the equivalent of QE. So that brought the European markets down. Now they bounced back up a little bit. We see the same thing happening in our U.S. markets here, but that drop much more significant. And when we look at what the DAX did today, down 500 points from the previous day's change, and from the open at 111.50, from the high at 113.23, all the way down to 106.41. Help me out with the math here. That's about 700 points worth of damage. Whereas in the S&P, we had about 55 points worth of damage. And this is why the DAX is such a big market. Now, it's a scary market to trade because of that 25 euros per point. Everybody loves talking about, well, what if I got it right? Well, let me talk about what if you got it wrong. You got a 600-point move at 25 euros per point. That hurts big time. You don't want to get that wrong. So a lot of people steer away from the DAX because of the risk involved. But we go up and look at the mini DAX here. Right, just about the same range, but at 5 euros per point. So that's, again, similar to what you've got in the Dow. Actually, a little bit more aggressive today, but again, ECB, European Central Bank, all that going on. So, yes, today was much bigger in the European markets than it was in our U.S. markets. And those of you trading the U.S. markets probably noticed it was a pretty big day. Now we've got our S&P futures, which have climbed back up to close at 2053.75. So we climbed back up to about the open of the year. And the DAX for the year is having a better year. One of the reasons why, that euro down at 109. A lot of the big rally that we had in European markets at the beginning of the year was the euro actually dropping off the table, or aka the dollar climbing. And of course, we all know how those currencies work. All things being equal, if the currency's going up, the market's going down. Well, look at what the euro did today. It goes from 106 to 109, and the market went from 11300 to 10600. So kind of a big deal here. So if we can see this big move occurring in Europe, it kind of translates into what's happening in our U.S. markets. And that was one of the big influencers. And it really brought us down to a point where we're looking at that 2055 open of the year. And then we got the market pushing a little bit below that. But as soon as we came down to about 2065 in the S&P futures, it's almost like, well, why not go ahead and take a look at the open of the year? And now we close out the day below the open of the year. So it's a big factor here in how these markets move. It is a global economy, and you do really want to understand what's going on in Europe. And the DAX is a great tool to do that. And the mini DAX is a nice tool to be able to trade because it's not quite the dollar value or the euro value risk that you'd have to put on with the DAX. Now, does anybody have any questions? Just realized I sort of rambled there for about 34 minutes. So what have you guys got? Any questions in the room? Or did I lose everybody? Did I put you guys to sleep already? Is that what happened here? It's a lot of information. I do see some typing. What do I expect for tomorrow? I'll be honest with you. I'm going to be straight up with you, Kayla. I'm a trader. I don't care. There are people out there who try and project what the market's going to do. I'm just going to trade whatever it does. So with that said, the S&P making that move down to 2055 really kind of puts a stress on the bottom end of the market. I think it may have to find some support level. We may get a nice little bounce before we challenge support, but it wouldn't shock me if the market decided to go down and take a look at that 2040 low in the S&P. I think the broader market's got a little bit of trouble right now. But be aware, a 50% retracement brings the S&P futures back up. Let's see, we went 95 to 40, so what's the midpoint of that? Uh, 60, 65, 60, around 70. The November open was 2073 for the S&P. We might see the market climb back up and try and challenge that November open. I realize we're in December, but if we go back up, watch that 2073 number in the S&P. If that gets broken, I think we're back on track to, well, the boring market that we've had for most of the year. The reality is this market really hasn't done much. You know, your individual stocks, your individual markets, your individual days have been great, but when you look at the big picture of the S&P futures, for instance, we opened the year at 2055. We closed today. It's December, 2053.75. You're down a point and a quarter for the entire year. So we haven't done that much. And to look at the market and say, well, it's obviously going to respond and do this, or it's obviously going to respond and do that, I think is improper. It just doesn't fit. It doesn't work. Again, individual stocks, individual days, sure. But in terms of the big, broader picture of the market, well, if hedge funds are getting killed, they're doing it wrong. I mean, that's the way I look at this, because these markets haven't done that much. What are you hedging? You know, if you're betting the market's going higher, then you're in trouble because it went down today. If you're betting it's going lower, you're happy it went down today, but, well, it really hasn't gone much lower. So if you made a couple of wrong bets, then you're getting killed. But smart hedge fund managers, I think they're, yeah, well, that's true. Picking a direction rather than trading. Exactly. And that can get you in a lot of trouble. But I think if you look at the overall market, it really hasn't done much. Now, don't get me wrong, there's going to be good trading days. But what do I expect for tomorrow and tonight? I mean, heading into the end of the first week here, I think you've got to keep in mind, you know, that November open, because granted, we didn't really have that much of a rally in November, but if in the first week of December we give back all the gains of November, which weren't that much, I don't think that really bodes well. So it wouldn't surprise me if the market tries to rally up on Friday, close out the week relatively strong. I think 85.50 was the open of the month in the S&P futures. If you get a nice strong 30-point rally, I think people are going to feel better about themselves. But if we get to a point where the market fails to do that, we certainly could be testing down. But really, it's a coin flip. You've got this 2040 low, and you've got that 2085.50 open of December, 2073 November open. I think the compromise here is to get the market up to around 2075, about 20, 25 points higher than we are right now, and just get out of the first week and get into the next week. So it wouldn't surprise me if the market kind of goes there. But if we go down a break of 2040, you could be testing 2016 before the end of the day. It could get uglier than it was today. Now, I don't think that everything's falling apart. I don't really see the market that way. Again, let me go back to my main premise here, which is that the open of the year in the S&P is 2055, and we just closed out today a very bad day at 2053.75. You know, it used to be that very bad days, and Josh probably remembers these, that's when the market's down 5 and 10%. Now, all of a sudden, a very bad day is a drop of 2%. I think we're getting a little bit, every little move seems much more gigantic than it really is, because this market has been boring this year. So I wouldn't get too caught up in a 1 or 2% move. I'm not really seeing anything all that exciting, but you know, how we set up the next week, I think, is more important than how we trade tomorrow. But as I said, as a trader, if it goes up, we'll be bullish. If it goes down, we'll be bearish. And that applies to every stock that you're ever going to want to trade. It applies to every single day that you get involved in the market. As a trader, you trade what you got. So I could care less where it goes. Just looking for the opportunity to get involved. And we'll see how the market develops. I know it's not a great answer, but it's the best I got. Anything else? And it looks like that might be about it. So Josh ran over a little bit. I hope that's okay. But sounds like we're done here. So thank you everybody for coming in and listening. And I guess we'll see you next time out. Now, if you click that registration link, the second link there, you can join us. That is tomorrow, right? Friday. So you can join us tomorrow morning. You'll hear Tom's view and our chief instructor Jeff Smith's view on what the market's doing, and they'll have the advantage of seeing what it's done overnight. So I'd encourage you, come on in, join in. You can be logged into 2 rooms at once. I'm doing that right now. I'm in this room, and I'm also over in DTI's main room, where they're probably wondering, wait, where's Chuck? He was supposed to be here at 4. So I got to run, but hope to see you guys tomorrow morning, 7:30. I won't be there at 7:30, but how do you join? Heinz, just click that link, and this is the registration link. That'll get you the passwords and the information you need to come in at DTI. It's free of charge tomorrow morning. You might have to listen to a sales pitch or two, but it's free of charge, and we'll have a lot of market information in there. So hope to see you guys there. I'll be in a little bit later in the day, but hopefully you'll still be hanging around. So thanks for letting me come in. I'll give the room back to you, Josh, and see you guys next time.